My forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. This kind of super thesis of the everything code and the exponential age. I started to look at all assets versus each other to say, if you're going to take risk, where do you take it? And everything was inferior to crypto. And I'm like, it becomes very difficult. If you look at it, the best performing asset for 3 years out of 4, every single year since 2009 has been crypto. And then there's 1 year, which is a bad down year, and then it continues. And the down year, it's the worst performing asset. But over time, it's compounded higher than any single asset class we've ever seen in history.
The world of macroeconomics is constantly evolving. And as we step into this pivotal period, it's crucial to understand the forces at play. We're witnessing a unique convergence of factors that are set to reshape the financial landscape as we know it. Interest rates are on a downward trajectory, while inflation takes a breather, providing an intriguing backdrop for potential economic shifts. But what does this mean for investors? How might this macro summer influence global markets? In the ever-evolving landscape of the crypto market, prominent figures like Raoul Pal have been offering insightful perspectives on the latest advancements and shifts. His observations have provided a unique lens into understanding the transformative changes sweeping through the digital asset ecosystem. Join us as we explore Raoul Pal's invaluable insights, unraveling his thoughts on the groundbreaking developments within the crypto market. His perspectives shed light on the future trajectory of cryptocurrencies and their impact on the global financial landscape. Economic shift predictions.
We're at the bottom of the business cycle. This is the kind of recessionary era. Businesses are laying off staff. Inflation is starting to fall sharply. The forward-looking markets, technology and crypto, priced in a recession last year. And they've been recovering since because they've been following the forward-looking indicators of financial conditions and other things. Right now, stuff like the Russell 2000 and oil is living in the present day, which is slow economy. So they're at their lows. And everyone's like, what the hell is going on? Why are these tech stocks going up and everything else is going down? It's because they're forward-looking, as it is their job. So I've been very bullish. I saw the liquidity cycle, which is the key driver of all assets. The liquidity cycle is based around this interest rate cycle, which is based around this whole debt refi cycle. Liquidity started bottoming last year in October, November, December, and that gave us the signal to start getting long both crypto and technology. And that's been, phenomenally good. I mean, this year, the Nasdaq's up 45% and crypto is anywhere between 80 and 500% this year. And that's got people scratching their heads. But our forward-looking indicators of the business cycle suggest we're going into what is, right now we're in macro spring.
Effective crypto investment strategy.
This kind of super thesis of the everything code and the exponential age. I started to look at all assets versus each other to say, if you're going to take risk, where do you take it? And everything was inferior to crypto. And I'm like, it becomes very difficult. If you look at it, the best performing asset for 3 years out of 4, every single year since 2009 has been crypto. And then there's 1 year, which is a bad down year, and then it continues. And the down year, it's the worst performing asset. But over time, it's compounded higher than any single asset class we've ever seen in history. So if that's the case, every other trade-off is suboptimal. Now, I can take that risk because I have income and I've got, assets. So I can take big risks because I think this is the biggest macro setup of all time. So I'll take that risk. But for other people, you can express some of these views without taking as much risk. If you believe in the debasement of currency, yes, you can use gold, but gold hasn't offset it very well. Yes, you could be cyclical and trade commodities. There'll be, as soon as we start going to macro summer, commodity prices will rise. You can make money from that. You can make money from, buying banks at the bottom of the cycle. You can make money lots of ways. It depends what your objective is. And how it came to me is it just became the big macro view. and therefore the big macro bet. And a lot of people you and I know all came to the same conclusion.
Unveiling the crypto evolution.
Outside of AI, the fastest adoption of any technology in all of humanity. It has been following a perfect log trend. And what was staggering is last year, the number of active wallets in crypto grew 42% in a year when the market went down 80%. That's like, oh my God. We're now at 516 million users. By the end of 2030, we'll be well over 1 billion users, maybe 2 billion users. So it is a very prevalent technology, and it's happening this cycle everywhere, kind of everything everywhere all at once. The banks are using it. They're already trying to settle securities on it. They're using it for payment systems. We're seeing Visa using it for payment systems. We're seeing mega brands like Mercedes-Benz or Starbucks using Web3 NFTs. We're seeing Hermes, LVMH as a broader company adopting this. We are seeing the ongoing adoption globally of cryptocurrency as an investment vehicle. We're seeing the institutions investing in it. I've had on my show Texas teachers, they were pioneers in the space. We've had Franklin Templeton, Fidelity. I mean, these are big companies. Now we've got BlackRock. So what is going on here? Here's a nice way of framing all of this. And it makes it easier for people who are kind of crypto cynical or don't really understand it. We have two worlds. We talked about this before. We have the physical world that we live in, your world of North Carolina, or my world of the Cayman Islands. And then we've got the digital communities that we live in. The crypto land and fiat world are these two worlds. Now, we've talked about GDP is slow in fiat world because of aging populations, debt, and lack of productivity. But over in crypto land, the population's growing at 42% a year in a year when the economy went down 80%. You've got productivity improvements as new uses of blockchain technology get introduced every day. And you've just wiped out the debt from the previous cycle. So you have a extremely fast-growing emerging market. And what happens is you're now seeing fiat world participants set up offices in crypto land. Franklin Templeton, Fiat, Franklin Templeton, Fidelity, TRS, they're setting up offices there. So we love this place. We think it's a dynamic economy. We want to build stuff here. Then the ETF comes along. The ETF, people need to think of as a trade deal between fiat world and crypto land. So it's a trade deal to allow capital to flow into this other economy. And as that economy, crypto land, grows fast, a lot of money's going to go down through this pipe of the trade deal, which is the ETFs, and then will flourish within that economy. So we're seeing this giant sucking sound of people seeing this economy. It's much like when China came onto the world stage. Is everybody flooded there? Everyone put their capital there. Everyone built offices there because they could see the big opportunity. Well, this is the fastest growing economy we've ever witnessed. It just happens to be a digital one. It has its own system of currency, its own interest rates and central bank policy. It has a financial system, which is DeFi. It has states like Bitcoin, Ethereum, Solana, whatever it may be. These are states within crypto land. And those have different policies. We have taxation systems within crypto land. We have assets, NFTs, within crypto land. And it's just because they've all been more attractive over time, it's sucking in more and more of fiat world into it. And eventually, I think it basically subsumes fiat world.
Psychological dynamics of crypto market fluctuations. And
I wrote that macroeconomic strategy paper on it. It was the first one ever written about Bitcoin, how to value it. And I said, listen, I think this thing could be worth, if you value it in the same way you value gold, this thing's worth $1 million.
That's right.
And let's assume I'm an idiot, discount myself by 90%. It's worth $100,000 and it was trading at $200. I'm like, this is the best macro risk reward I've ever seen in my entire career. And so I bought it then, as did many of my kind of global macro investor people at the time. I wrote it up and it went up 5x very shortly afterwards. And then collapsed 87%. My time horizon, however, was long. I'm like, this is an option. It could go to zero because it was still very early days, but I think it could be worth $100,000, and this should be a 10-year bet. So that was the idea. So like, goes down 87%. I didn't have a massive amount, a few percent of my portfolio in it. It's like, fine, okay, we'll see. By May of 2017, I was up 10x from my original entry. Having seen it go down 87%, I was now 10x from my entry. I'm like, okay. And then there was a lot of confusion in the space about forking wars and stuff I didn't understand. And I could see it was like ramping up. I'm like, I'm just going to take profits. Great trade. I thought, I'm a god. I'm like George Soros here. I've just nailed it. It then goes up another 10x into this frenzy into the end of the year, that spectacular bubble of 2017. And I was fine with that. I'm like, I made 10x. I'll leave it to the next person. You know, Novo became the billionaire out of that trade. I didn't. And then the market fell. And it did its usual 85% round trip. And we continued to educate people via Real Vision about it. I still thought it was I hadn't lost my faith in the idea. What I'd done is screwed up my time horizon. I didn't think that I should have kept it for the 10 years, but I didn't. So then, all well and good, I see the pandemic, crypto collapses, I buy back in at 6,500 and still hold it to this day. It went up 10x, come down, going back up. Great. Made a lot of money from it. And then about a year ago, I went back and said, what happens if I just kept my original bet, which was much smaller? I'd have made 5 times as much money. And I traded it well. I bought it low, sold it high, bought it into a dip. I would have made 5 times as much money. And then I thought, I always show the log chart, these business cycles in the log chart. I'm like, what happens if I just added my original investment every time it got to one of these business cycle lows? I would have made 25 times as much. I'm like, I completely screwed it up, even though I did well from it. So this time around, I knew we were going to get a down cycle. I didn't get the top. I thought it was going to go higher, whatever. It's irrelevant, because it's the down cycle where you add that makes you all the money. So I spent all of last year buying Solana, Ethereum into the massive sell-offs, because then you compound much faster. So you should be embracing the volatility if you've got a long-term view. If your view is 1 year, 1 year, 3 years, 3 months, it's much harder to deal with. It's so volatile. But when you just zoom out, use the logarithmic trend and don't freak yourself out, which is why I've tried to be the voice of reason on Twitter when everyone's freaking out. It's like, we've all seen, FTX goes bust, Mt. Gox won't bust. We've seen this, we've seen that. It's just noise. It's built on top of the internet rails that already exist, and there's zero barrier to entry apart from just paying OpenAI. And then Microsoft are going to put into every single one of their products. It's going to get to 1 billion people by mid next year. So the acceleration of this technology plus the improvements of the technology itself are exponential squared, kind of. It's like we've never seen anything like this. No technology has ever improved at this rate. So it becomes very difficult to forecast.
As we traverse this ever-evolving landscape, it is essential to recognize that the future remains unpredictable. Thus, arming oneself with comprehensive information before delving into investments becomes paramount. Remember, in the world of digital assets, knowledge is key. Stay informed, stay adaptive. Don't forget to like, share, and subscribe for more in-depth analyses and valuable insights. Until next time, happy investing.